Now for global business updates, Rotus Oddiri joins us. Good morning, Rotus.
Good morning, Dr. Bassi. Good morning, Vimbai,
Morning,
Rufai,
Rotus.
and all our viewers out there. Oil prices inching up just a tad, but they're still very low. $61 for Brent crude after that big fall that we saw yesterday. There it is, $61.19. West Texas at 58. This is still not good. $75 for Nigeria's benchmark. Saudis, the Iranians, the Iraqis, the Kazakhstan, everybody, they're all going to be feeling this pinch. Asian markets. China and Hong Kong returned to trading from their Labor Day holidays. South Korea and Japan are still closed. Shanghai Composite Index was up. We got services PMI, 7-month low over in China. Hang Seng, that was up by 77 basis points. The TAIEX in Taiwan, that's down. Nifty in India down. Australia down as well. Moving on from the Asian markets, Hong Kong sold about 60 billion Hong Kong dollars into its currency market in order to weaken the Hong Kong dollar. So this is the reverse of selling dollars into the currency market in order to stem a currency that is falling. It actually has been appreciating. Same thing we saw with the Taiwanese dollar as well. And what seems to be happening is that the currency markets are not, there are more sharks there than in the equity markets. They're not as positive of things. These trade tensions have seen the US dollar weaken. There are some IPOs that are happening in the Hong Kong market, and basically you're just seeing currency flows moving around away from the US. So that's why you're also seeing gold appreciating as well. So that's what we saw there. And then the band, Hong Kong has a currency peg. With the US, I think it's about $7.75 to about $7.80, and it actually appreciated pretty rapidly. And again, that they don't want a currency that's too strong. They want it to stay within that peg. But the wider story here is about dollar weakness. We've got a number of companies that were announcing earnings, but mostly the theme across the board was the hit from tariffs. Philips, this is the Dutch tech company that makes healthcare devices and so on. They said that the projected hit from tariffs is anywhere from 250 to 300 million euros. The US is their largest market. About 40% of their business is there, but they import a lot of inputs from China. That's Philips. You go to Ford in the automotive sector. Ford wiped out, they took away their full year guidance, saying that, look, we don't even know what's going to happen later on this year because of the hit from tariffs. The hit was actually $2.5 billion, but they said they're going to put in some measures to mitigate it, which brought it down to about 1.5. So you've got tech, healthcare tech from Philips, you've got automotive from 45. For GM, I think it was about 5 billion. You go to Mattel, which is the toy maker for everybody that's got Barbie dolls for their daughters and so on. Mattel is at the Milken Global Conference, which is going on in California right now. It ends tomorrow. And the CEO announced that they will have to raise cost of toys in the United States, about a 40% increase because of the hit from tariffs. And they've estimated that their cost increase is going to be about $270 million. We talked about Apple last week. Apple says their projected hit is going to be about $900 million. So across the board, we've brought this forward just to show that regardless of what business it is, from toy makers to vehicle manufacturers to healthcare tech manufacturers, it just shows you how important China is with respect to supply chains. Now, speaking of the Milken Institute, Scott Bessent, the Treasury Secretary, was there. Take a listen to him selling the Buy America brand and saying that tariffs are an important strategy of whatever the Trump administration is trying to achieve.
America is the Schelling point of global finance. We have the world's reserve currency and the deepest and most liquid capital markets and the strongest property rights. For these reasons, the United States is the premier destination for international capital, and the administration's goal is to make it even more appealing for investors like you. This morning, I will explain how we plan to achieve that goal. The primary components of the Trump economic agenda, trade, tax cuts, and deregulation, are not standalone policies. They are interlocking parts of an engine designed to drive long-term investment in the American economy. Our goal with trade policy is to level the playing field for our great American workers and companies. With a level playing field, American industry can outcompete all challengers. Tariffs are engineered to encourage companies like yours to invest directly in the United States. Hire your workers here, build your factories here, make your products here. You'll be glad you did, not only because we have the most productive workforce in the world, but because we will soon have the most favorable tax and regulatory environment as well.
I played that specifically because there's a response to that. There was an incredibly insightful debate that was organized by Bloomberg and Open Debates, which featured 5 economists that were talking about Trump's policy. And I have highlighted Mariana Mazzucato. She's an Italian-American economist who is a professor of economics at the University College London. And she excellently explained how the Trump administration lacks an industrial policy. So the question she's answering here, and she starts off by saying no, but maybe, is, are tariffs part of a useful economic strategy? Here she is.
So, no, but sort of maybe, in the sense that tariffs, if they're done in a strategic way, an intelligent way, could potentially be part of a country's industrial strategy. You could, for example, apply those tariffs instead of just a blanket application across all sectors. You could say there's a particular sector that we want to be more competitive in. It used to be called the infant industry argument, which we're going to protect for a certain amount of time, literally to give that sector time for learning, for getting some government support to increase competitiveness. Now, that's basically called industrial strategy. So tariffs could be part of industrial strategy that is complemented by government investments in different areas, like, by the way, we've had in the U.S. secretly. I wrote a book called The Entrepreneurial State, where I argued that the U.S. likes to talk like Jefferson, but act like Hamilton, who you all should know who Hamilton was because of the musical. But he was someone who actually believed in active industrial strategy. And in fact, everything that makes your smartphone smart and not stupid, the internet, GPS, touchscreen, Siri, all actually came out of the U.S. industrial strategy. There is no industrial strategy right now in the Trump administration. In fact, they are destroying, or saying they will destroy, the industrial strategy that exists. For example, the CHIPS Act. The CHIPS Act was all about actually getting that particular sector to be less reliant on Asian produced chips. And I'm sure we'll come back to that later because my time's already almost up. But that is actually being demolished. So tariffs without an industrial strategy is simply a mercantilistic strategy. And you talked about the Middle Ages. I think we're actually going back to that period.
Finally, the OTC conference going on in Houston, Texas right now. Senator Heineken Lekpobore, Minister of Petroleum Resources, Oil, says that the Afrexim Bank is going to put about $19 billion into the proposed Africa Energy Bank, which is this energy bank that is supposed to fund energy needs across the African continent. So pretty large increase, because the last we heard was $5 billion in seed capital. That's our update.
Thank you
for
very
today.
much, Rotus. I understand we've run out of time.
Thank you.
Federal Reserve meeting,
Yes,
policy
today.
meeting starting today.
Yeah.
We'll get the new rates decision maybe tomorrow.
Yeah.
But we'll see how it goes.